All right, we'll go ahead and get started here. So today we're going to kind of go through a one shot, one kill lecture. Is a highly requested video and topic that we've been going through the past couple of weeks, both with the daily markups and the tape reading and such. And um, a lot of questions and videos that I've done in the past reviewing the one shot, one kill trades. So in this video, we're going to basically go through what I look for and what I'm trying to find and determine in order to find a one shot, one kill for the week. Now, this isn't always going to offer you the weekly low to the weekly high. I'm going to say that off rip. It's more of just finding an opportunity that has the possibility of netting you an entire weekly profit or a weekly target in one trade, and you do not have to trade the other days of the week. That does not mean it's always going to be a winning trade, but rather setting up a framework to give you the highest probability day and highest probability session and trade, and extend as much of that trade to the furthest target that you can based off of the rules and situations that we're going to look at today's video. So kind of just a brief list here. We're going to go through profiling, determining entries and targets. That'll be probably last, qualifying weekly highs and lows, and really how do you know that this low is going to be trusted, how time plays into all of this, right? Time of entry, time of exit, everything around the economic calendar and things like that. And then kind of touching on days of high versus low probability and a bunch of other things that I haven't written down. But this is just kind of a brief list that we'll go through off the start. Let me see if I can get, I was gonna see if we can get an admin in here, but it's fine. This is all being recorded as well. So if you got any questions or anything, feel free to put them into the chat as we go along. And then I'll make sure to post this up later today. All right. So I want to reference some obviously material before we get into this. This is none of my content like that I've figured out. It's just kind of a culmination of a bunch of different things that works for me in both ICT concepts and just stuff that I've figured out through my own back testing and such. So some resources for yourself that would be useful for this kind of topic would be the ICT core content month 7, especially videos 1 through 3. So these are going to really talk about the profiles for the week and kind of how to determine your weekly draws and such. So if you've not seen these, it'd be a very good idea to watch these in conjunction with the lecture today. I'm basically going to simplify as much as I can without cutting out the the useful stuff, just kind of cutting out the fluff. There's also some other videos as well. Obviously, the if you're in the private group or the PDF group, reading the chapters that are relative to the weekly profiling, and if you're in the Patreon group, going through the one shot, one kill videos and executions that were shared in the past year or so of price action, especially the one from the 19th or the 18th of September, and then the ones from April and May that we took, basically trying to snipe the weekly low to weekly high. So these are really the main ones. I'm not going to say my own videos, but yeah, ICT core content month 7, videos 1 through 3, and then any other associated videos that you think be helpful, you can put in the chat for others to study. So we're going to get through examples and stuff as well in this video, but I don't want to make it super long. I'll probably be around 40 minutes if I had to guess, 30 minutes if I had to guess, to cover everything. So we'll first kind of define what a one shot, one kill is. Like I said, it's a setup that will offer a weekly goal or P&L. We're not going to say P&L, but weekly goal within one trade, and basically offers you the freedom of only having to look for one day to take a setup. And the preference is that you will know what day that is and what session that is going into Sunday. And it may not be always on Sunday, but basically you're going to have the confidence to know when you wake up on Sunday or when you wake up on Monday, my trade is going to be there on Thursday New York session or on Tuesday New York session. And obviously as the days play out, you're going to get a better refined more day that's going to narrow down your focus. But I want to give you the confidence of understanding that these setups are every week, and the highest quality setups will happen 1 to 3 times a week. So instead of trying to worry about when the model is going to be there, or trying to take a trade Monday through Friday and having 2 winners and 2 losers, just opening up as much as you can the freedom in trading worrying less, fearing less, and rather just showing up one time a week to get your job done and leaving, because that's probably what everyone wants in the long term for trading anyways. So first, we're going to look at basically determining all the different points that go into on Sunday. So when Sunday opens up and the new week opening gap prints, what do I look for? What do I try and frame that offers me information that's not in the chart yet to then refine down as Monday, Tuesday, Wednesday all starts to print? Okay, so the major points that are going to be used, let me pull up a document here so I can get some good, here we go, is number one is going to be the order flow. So higher time frame order flow, and clear some of this stuff out. Higher time frame order flow and reading it properly. So basically determining a narrative for the market coming into Sunday's open. Narrative, can't type. It's going to be incorporating the economic calendar. We're also going to be framing the PD array matrix and higher time frame arrays that are going to be used. We'll just keep PD array matrix. And basically trying to determine a likely weekly profile. All right, so what am I looking for on Sunday before the week even prints that's going to give me a very good understanding of what's likely to occur, like I said, going into the open. So that way on Sunday, we know, okay, my trade's going to be there on Thursday, like highest probability, or it's on Tuesday or Wednesday. And as the days print, how we can refine that down. So number one is the higher time frame order flow. And that is going to be used on the 4 hour plus. So preferably looking at, you could look at the 1 hour. I think the 4 hour gives you the best perspective since it's tied to the weekly time frame on reading the order flow going into the next week. So you're going to look at preferably the higher time frame, 4 hour plus institutional order flow to determine a rough bias for the next following days. You're also going to use a 3-week look back to kind of frame where the liquidity is and where the higher time frame PD arrays are. And you're also going to use seasonal tendencies, or basically any sort of higher time frame tendency for the market, like if we're in a bullish environment on a year, April and May making a swing point, and the same thing in the fall. So kind of just using higher time frame point of interest. It doesn't have to be perfect, but this is what's going to help frame a rough bias going into the week. All right, so you want to be looking at your higher time frame order flow, 4 hour, read what's going on, read the narrative, where's the sell side, where's the buy side, what has been done in the market, what's been left behind. So as soon as the new week opening gap prints, you have a rough basis of where the market is likely to draw to for the next 5 days. It is a common mistake to expect a bias to be immediately ran out as soon as you have that bias to be formed, right? If I have a bullish bias going into the week, I do not expect Monday and Tuesday immediately to run for that drawn liquidity. With a weekly open, from weekly open to weekly close, you have to understand the fractality of open, low, high, close, and AMD. Without understanding that and how that works, you're going to find this very challenging, is if you just look at each individual day of where's the draw, instead of finding where the entire week is likely to draw to, and then finding conclusions off of that. So determine your 4 hour weekly order flow coming into it. Use a 3-week look back to determine liquidity and such, and seasonal tendencies. This shouldn't be too hard on a Sunday, just looking at the following days. Okay, I have a rough bearish or bullish bias based off of XYZ, and those should be obviously incorporated into the market truths. So if you're having trouble determining what your narrative is going to be and what you're going to start off with, these should be flowing from market truths. So open, low, high, close, MMXM, ERL, and IRL. And then time, which in this case will be economic calendar. All right, so going into Sunday, to recap, we're going to be looking at the higher time frame order flow to determine a likely draw for the week, bearish or bullish. And now you're not expecting every day to be green or every day to be black, or red, I guess, towards that weekly draw. You're now going to incorporate different sections of the PD array matrix and the economic calendar to figure out what days are likely to be within, basically making up the complex of the weekly candle. So we're going to break down the weekly candle into 4 different sections using the standard open, low, high, close. And these, I want you to imagine each day being a building block within this depiction. So you have number 1 here, number 2 here, number 3 all up in here, and number 4 as the retracement. All right. So this leaves you with 4, technically, actually, we'll say 3 PD arrays and drawn liquidities intra-week that you can be hunting for. I would suggest just going for the distribution target. So down here, you have your weekly manipulation target. Okay, and then at the highs, you have your weekly distribution target. I'm just using the framework of IRL to ERL here. You can substitute these inversely. So weekly distribution target. And then your final one, which is a little bit smaller, is a weekly retracement target. Now, this will not show up every single week, but this is kind of what you see with your TGIF type of weekly profiles, more commonly seen with the classic buy week and classic sell week. All right. So using that order flow, we have a rough framework for what that week is likely to do. We have an accumulation phase, a manipulation phase, a distribution phase, and sometimes a retracement phase at the end of it. And like I said, this one in here is going to be normally the easiest one that you want to be finding your one shot, one kill within. So it's paramount to understand when that weekly manipulation target has been met, what qualifies that low to be, okay, this is actually the true low of the week. And now we can trust that it's going to start just running for that target. And obviously finding an entry model within there we'll discuss. But this gives us a framework going into Sunday. So let's say Sunday, we open up. We're inside of a consolidation range. We have smooth highs at the top and jagged edges at the bottom. So you would assume that coming into Sunday open, we're going to have a bullish week. But we have Tuesday CPI. So this is where we're going to start putting in our economic calendar, right? Economic events are typically seen as one of 2 things, either as manipulation away from the weekly target or expansion / distribution towards the weekly target. And you can loosely fit every single economic calendar event within one of these 2. And then we can kind of plug in the numbers. So based off of what we're seeing here, depending on where the news driver is and what type of news driver it is, we can kind of loosely depict which day is going to fit within the steps of the weekly candle, of course, right? So if we have Tuesday, let's say PPI or something, we have a bullish week and we're hovering right above that daily imbalance. We expect Monday in some sense to accumulate or start to run down for that weekly manipulation target. Tuesday to tag into that weekly manipulation target and form some sort of protected low and then start to trade away. So we look for our one shot, one kill earliest on Tuesday, but preferably on Wednesday or Thursday, targeting the weekly distribution target as long as it has not been met. All right. So the economic calendar, we're using red folder news events. News events basically to fit inside of that AMD and inside of this 4-stage of the weekly candle. And kind of loosely figure out, is it going to be used as expansion or manipulation? And we know that it follows this preferably first. So it's going to initially manipulate and use early week news drivers to manipulate and later week news drivers to expand, right? This is a loose depiction and it's all kind of rigid, but I'll show you examples as we get into it. All right. So higher time frame order flow, economic calendar, and now PD array matrix is what we're going to be using to determine what these targets from the higher time frame PD array to higher time frame PD array is likely to be. All right, so I'm going to pull this straight from the ICT core content month 7, so there's nothing, there's no disparity, but preferably you want to be finding a daily, a weekly, or a monthly PD array. Now ICT says PD array. Now, since we normally frame our biases and every single frame, basically every single static time of price action, whether it's a session, whether it's a day, or whether it's a week, we use IRL to ERL, ERL to IRL. As it's a market truth, we know that price action goes from liquidity to imbalance and imbalance to liquidity. So when we talk about a daily, weekly, or monthly PD array, typically it's going to be one of 2 things, either some sort of liquidity pool, buy side or sell side, or a fair value gap in the form of a liquidity void, imbalance, so on and so forth. So you will find all of these arrays here on a 4-hour chart. And that's why typically people say I've said it in the past as well, to use the 4-hour chart to frame your weekly movement, as it's the easiest one to see everything. Sometimes you're not going to see a clean daily gap or a clean daily swing high or whatever it may be. You break it down to the 4-hour chart, everything's a lot clearer. You can see the MMXM and the ERL to IRL, I think, a lot more clear. But that being said, the PD arrays that you're going to be using to frame the weekly low, the weekly high, is preferably going to be on your daily, weekly, or monthly charts. All right. So especially if you link this to the 3-week look back that we just talked about, you go to your daily chart and you mark out every single fair value gap, every single swing high, right? We know that number one, the liquidity is going to be time-based. So previous weekly high, previous monthly high, previous daily high. And the IRLs preferably are going to be formed in some sort of discount or premium of the relative dealing range. All right. So we can now label, in this sense, we can label and assign PD arrays that are likely to be used for the following or upcoming week. So basically this is giving you a loose framework without even needing the chart of what is likely to occur on the following week. All right. So you can maybe look at it on Sunday. You say, okay, this is going to be a bullish week. I'm expecting we have news drivers on Tuesday and on Thursday. And based off of the daily chart, we are going to see a gap in discount of that dealing range on the daily chart, and then the previous weekly high above us. So you could loosely assign that, okay, Tuesday is probably going to be manipulation into that daily gap. Wednesday is going to be some sort of expansion. Thursday, maybe some sort of expansion up into the swing high, as long as it hasn't made that weekly high yet. And then Friday is most likely going to be the retracement back in. And now, based off the economic calendar and what you're seeing off the chart, without even seeing Monday print, Wednesday is most likely going to be your one shot, one kill type of day. And you're still obviously watching Monday and Tuesday's PA, but if Monday and Tuesday's PA are sloppy or don't really follow your weekly profile for whatever reason, then you can adjust. All right. So that's why people say skip no news Mondays. That's typically because we're still within this first stage of the weekly candle. We're still in some sort of accumulation, or it may be in the manipulation of the weekly candle. So labeling and assigning these days that are likely to fit within these 4 boxes is helpful. And then obviously this is where we're going to, if you've not seen the ICT core content month 7 video 3, he goes in depth for about 50 minutes talking about every single weekly profile. I'm not going to do that in this video. I'm going to give you basically 3 scenarios that most of the weeks follow. But I highly, highly, highly suggest watching that video multiple times to really understand what's going on here. Like I said, I'm trying to simplify it as much as I can. But we're going to take all of this and basically look at an example going into one of these previous weeks. All right, so we'll pull up the chart here. And I want you to just show you basically all the weeks that have been following this. Obviously, this week, in this case, Monday creates the daily imbalance here, right? Monday's expansion creates a daily imbalance. That's a PD array on the daily chart that is likely to frame the weekly low off of. You have the previous weekly high up here, right? And if we were to go back to these weeks on Thursday, the September 25th, let's take it back over here. You go to the daily chart. I'm going to refresh it. I'm going to kind of show you what that would look like if we were to see this on Sunday. So if we were to go back, let's pull out a fresh week here. We're looking at our daily chart and assigning basically those variables that we talked about before. We want to be marking out every single daily premium or discount array that could be likely used within the chance of that weekly target. So here we have 2 gaps, a third gap up in here. And then you have this previous weekly high in the form of a external range of liquidity. And then you have the previous weekly low down here, previous weekly low down here. So I've taken the previous 3 weeks or so of PA and broken down every single PD array that is likely to be used for the following weekly candle. So I'm using this this week right in here to frame it. And if you go to the 4-hour chart, you read the order flow coming into the current week. So look at this green line here. This would initiate the week following. And you look at the price action that is left behind coming into the week. So on a 4-hour chart, you just read what's going on. Drops into discount here, respects a daily imbalance, leaves it, right? You have a consolidation, original accumulation forming at the previous weekly high, drops into the range, fills the gap, again, runs into the inefficiency here, failing to take out the previous weekly low, and then starts to leave. You have a run on stops, opposing the previous weekly high, coming into the week, and then the new week opening gap opens and it starts to print up higher, right? So if you were to see this on Sunday, you could loosely assume that, okay, this following week is most likely going to be bullish, and you can break it down like this. So if we're bullish, like we said, we're going to look at basically all of the different steps that we would take on Sunday to kind of figure out what the weekly profile is likely to be and what day we're likely to trade on. So following the PD matrix, we would mark out the daily gap here, daily gap here, daily gap here, sell side, buy side. So these are both time-based liquidity pools in the form of previous weekly lows, and then the IRLs all in here. And we're making this kind of grid to figure out what period it's going to likely tag into to form the weekly low or weekly high. It's very simple. Like I said, the IRLs are going to be in discount or premium of some sort of dealing range, and the previous weekly highs and lows are going to be time-based. So as you open up on Sunday, let's take it back to here. You can expect the open, low, high, close to print going into Sunday's price action. And then you pair the news driver with that manipulation and expansion that we talked about before. So using narrative, and if you have a good understanding of price action, you can expect different profiles. So if I'm bullish coming into this next week, but I want it to come all the way back down into this gap, it could, or to the previous swing low, it could. But let's look at our target, right? Our target is the previous weekly high. So we can use simple mathematics with ERL and IRL. If we're targeting ERL, we subtract that from our statement. We're looking for an IRL as our weekly manipulation target. So I wouldn't say completely remove the previous weekly lows, but you want to be looking at gaps first as your manipulation target. If it disrespects that, it's a different problem. But your first gap in the short-term dealing range between this swing low and this swing high, or whatever swing high we form on Monday or Tuesday, leaves you with this gap in discount. It does not matter if it's already used. It does not matter if it's already been closed through. You're looking at a reference point to frame a weekly low off of. Okay, so that is your price level. You know what PD rate, you know what time frame it's going to form on. Now you're looking for time. Preferably every single low of the week or high of the week or continuation or basically OSOC of the week will be formed on some sort of red folder news driver. All right, so in this week, we had 10 a.m. news on Tuesday. We had 10 a.m. news on Wednesday, right? We're marked out a PD array matrix. We assign that, okay, we have 2 daily gaps in discount of the dealing range. We're targeting the previous weekly high. And based off of what we're seeing, we're assuming since Monday has no news and Tuesday has 10 a.m. news, is Monday going to be part of the manipulation or part of the one shot, one kill expansion? Probably not. So Monday is going to be most likely accumulation of some sort. Even if it moves, it's still part of the weekly accumulation. So will we want to be trading on Monday to find our one shot, one kill? Probably not. Tuesday, you'd be studying the price action. Does Tuesday drop into that weekly manipulation target? So the daily gap in this case, run some sort of internal sell stops formed on Monday and now displacing with energy and have a bunch of other stuff that indicates it's the weekly low. If not, you go to Wednesday. Now, this weekly manipulation target here, you want to see this tagged preferably between the times of, we'll say Monday and Wednesday in New York open. Okay, the probabilities increase if we're bullish for the weekly low to be formed between Tuesday London and Wednesday New York open. All right, so if we're bullish and we see it drop into that daily gap, you know, on a red folder news day, let's say Tuesday during the London session, and you have a bunch of other things. What are those bunch of other things? So in order to qualify a weekly low, if we're bullish, right, we want to be seeing weekly low for bullish should have, like I said, the H4 PD array plus tagged into, preferably a daily IRL or daily liquidity pool. You want to see SMT at that low. You want it to be preferably a red folder news driver, right? You also want it to be between, like I said, Monday and Wednesday New York Open. There are going to be times where it goes past that, and that would be a lower probability week. Doesn't make it untradeable. It's just the likelihood of it becoming either a consolidation reversal profile or more of a consolidation week is higher. So if you see price Monday, Tuesday, Wednesday, Thursday start taking internal range stops, goes Monday high to Tuesday low to Wednesday high to Thursday low, most likely it's something you want to be sitting out on. So all these things, and then you can have H4, SysD, and displacement would qualify this weekly low. So let's say you're bullish, like we said over here, and we watch Monday play out, okay? Monday plays out, it starts running towards our drawn liquidity. Does it tag into a daily sibi or a daily swing high? If you go to the daily chart, it does not, right? Does it tag any sort of higher time frame, time-based liquidity or inefficiency? No. So this doesn't completely break our understanding of the weekly profile, but rather it is building in sentiment for the market. So sure, it runs above this swing high, and our bias would be bullish. So in most scenarios, if it was actually running up higher on Monday, that should be sending off some flags to indicate to you that, okay, maybe likely if Tuesday, for this case, runs out the previous weekly high and then has all of these requirements and starts displacing down, well, then maybe my bias was incorrect and you start to reframe it. But does Tuesday, in this case, drop into that daily array and form the weekly low? So you see Tuesday does drop down below the weekly open, but does not tag the higher time frame PD array, nor does it have any sort of displacement out of it. And you can look for SMT and such. But this is not called, although it drops below the weekly open, it does not form the weekly low. It's still part of the weekly accumulation at this point. And if you're trading Tuesday or looking at Tuesday's PA and you saw this, doesn't really do anything coming into New York Open, that's a day you can skip, right? So when we're talking about high probability versus low probability days, high probability is this most times. It's when you have the week, the day, and the session all lining up. There are going to be high probability days inside of this box as well as this box. When in this case, you have your weekly manipulation target and it's energetically running towards it. But when I'm personally looking for high probability days, it's going to be one-sided directional expansion towards some sort of weekly goal. So whether that's the weekly low or the weekly high, that's the preferred type of entries that I want to be taking. Can still scalp on these days and these days, but the best ones are going to be happening within this blue shaded box, right? So preferably between the days of Tuesday and Thursday is where you're going to see these kind of entries go on. All right. So as you look into Wednesday drops going into London session. So Wednesday low tags into the IRL during the high impact news driver, not the actual news driver itself, but rather the day of the news driver. So daily imbalance, we can check for SMT, red folder news driver, time, the Wednesday London session, so within the range of highest probability. And then do you have displacement and a SysD outside of the range after that? If you look at the 1 hour chart going to the New York Open, it starts to run away and you have a change in state delivery as well as a inversion fair value gap that is traded through. So 2 indications of a likely change in order flow. That is where if you were to see this waking up and it's in line with your bias, it meets all these requirements, this is the highest probability chance of you finding a very, very high quality move that you can get in during your session using a regular entry model and then hold it all the way until your weekly target, or maybe all the way till the end of your day. All right, so if we were to get in on Tuesday, for example, or on Wednesday here, you can hold it all the way up until the previous weekly high, or all the way until Wednesday's close. And we'll get into entry models and stuff like that, but just kind of briefly showing you an example of what this would look like. This is what you would be doing every single week. So when Sunday opens on this Sunday, read the 4-hour order flow, determine where the liquidity is, what the bias is coming into it loosely, determine where your PD arrays are that are likely to be used at the weekly high or the weekly low. You're going to look at the economic calendar, determine what days are hot and are likely to form that weekly low or weekly high or give you a weekly continuation. The first initial news drivers are likely to be manipulation. The later news drivers are likely to be expansion. And then you can start to read the market as Monday and Tuesday print. If you're trying to do this on Monday and Tuesday, there's no problem with that. But if you're just coming into the day, looking at price action on the 1 hour chart and trying to figure out where each day is going to go to, Monday you do that, Tuesday you do that, Wednesday, Thursday you do that, it's going to be very, very challenging because you're forgetting where the weekly candle is going. If you're looking on Tuesday, right, and we start dropping down, you're going to assume that, okay, Tuesday is bearish, and then Wednesday is going to be bearish just because it printed to the downside on Tuesday, instead of understanding that the weekly bias and the weekly move is going to be to the upside. And every single week, every single day, session, and week, you have to understand how AMD works, how open, low, high, close works, and how that plays into every single open and close of whatever range of time that you're looking at. Right? If Tuesday doesn't close below the weekly open, that hints maybe Tuesday is still part of the accumulation. Sometimes, right? It doesn't have to necessarily close below the weekly open, but it's dependent on these things here. So if, say in this case, Tuesday had tagged into the higher time frame PD right here, it could still close below, but then Wednesday, when we open up, we should see it already be taking out the Tuesday's high. And we're not going to be worried about that. We don't see that as a run on stops. We see that as a market structure shift. And then looking for entries after that. So this kind of goes through what I would be looking for on Sunday. Kind of assigning the economic calendar, looking at the AMD for the week and stuff. And every single time that you have a losing trade, this is so important. But every single time you have a losing trade and you get the bias wrong, right? It's not some stupid trade that you took, but rather it's a good losing trade, meaning either the bias was wrong or you misidentified it as a high probability or low probability day. This is what you want to be going back to. And if you're going to take anything away from this video, it's this, is when you have a losing day or even a winning day, make sure you understand what that day means for the weekly profile. Are we still in weekly accumulation? Have we formed the weekly low and now we're expanding towards the weekly draw? Has the weekly draw already been met and now we're going to consolidate and retrace back inside the range? But every single time you get the bias wrong, even for the session, when that day is finished, you go back in the day and you explain to yourself what is going on for this chunk of day, this 1/5 of the week in application to the weekly draw and the weekly profile. If you can answer that question correctly, you normally are given a bias for the following days of the week every single day, right? If you still are confused, you let that day play out. You let maybe the pre-market play out going into the next day. And if it still doesn't make sense, you skip that session. You let New York Open play out because there's still going to be a one-shot, one-kill opportunity after that. So normally you're going to have the weekly draw in mind by Wednesday, New York, or normally by Wednesday close. If it's still inside of the range, like I said, and taking internal stops back and forth, that is a week that you're likely going to be skipping or probably trading on Thursday or Friday later in the week after it forms this kind of weird consolidation profile. All right. So in this case, let me check off the board what we got. So emphasis on the blue shaded area where basically this one shot, one kill, the ones that we want to be finding as the weekly, the daily, and the session all lining up. All right. In here, you're not going to have all three. In here, you can have the weekly is up, the daily is down, maybe the session is down. In here, you're going to have the highest probability of this time frame alignment. And that allows us to get these 6R plus trades, 8R plus trades, 10R plus trades. That's what we want, right? We don't want to be taking 2R scalps all the time. If it offers us an entry at 950 and I tell you you can hold that until noon or until 1500, that's the kind of trades you want to be taking, right? So if you find these losing trades, right, on Tuesday, like I said, you have a losing trade, and then by Thursday, you've already figured out kind of what's going on, and you can identify the weekly profile and the weekly draw. It's very easy then to go back into Tuesday's PA and say, oh, I lost here because we were still in the weekly accumulation. It's not going to want to displace. It's not going to want to move towards my draw. It's actually going to move away from my draw originally and drop into this daily gap and then start moving on Wednesday and Thursday. All right. So it's very important that if you're able to do that, it becomes so much easier to really understand each week is going to have one of these moves, multiple of these moves sometimes, and all you got to do is capture one bit of it. If you do not get the day of the low, let's say Wednesday forms a low, preferably Wednesday is the day that you want to be trading, there's still normally going to be a trade opportunity on Thursday or Friday with the same kind of framework. You know, if you're expecting, okay, Thursday, let's say Wednesday drops into the low, you know, drops inside the range and still has not met its target going into Thursday, already your loose bias would be bullish. And then if my bias is bullish for Thursday, that should give you everything you already need. Okay, that means my daily candle is going to look like this. So it's going to be open, low, high, close, right? You wake up at New York open. What did London do? Did London manipulate? No. And you can start to do all those easy things to find your bias instead of looking and reading the order flow and deliberating back and forth. You already have a loose bias. That's what I did this morning, right? If you're in the Patreon group, that's what you saw me post at like midnight or something or whatever it was. I was like, yeah, like you don't have to look at the chart coming into the morning. I said at about around midnight. Bullish bias going expected into New York open, fib extensions being targets above the all-time highs. And we'll talk about these targeting things later on. And then eventually at 11:29 we tag those targets, and you can have a bias waking up in the morning, and as soon as you wake up, you look at it, you're like, oh, this is that same exact bias, and you can just trade off of that. All right. So like I said, this is I would encourage you to watch that ICT video on weekly profiles. But if you're looking for qualifying a weekly low or weekly high, this is the way you do it down here, right? If you have all those things lining up, that's great. And then your continuation models will all be formed normally on a 4-hour PD array still, if not a 1-hour PD array. So now we can start to look for targets and stuff. I'm going to delete this for now. Actually, we'll go down. Targets, time, price, fib, extensions. All right, pretty simple. If we have a bullish week and we see that, let's say Tuesday makes the low, what are we looking for on our Tuesday trade at 950 to be targeting? You know, preferably if we could hold it till Thursday, that's great. I know sometimes you just can't hold it until close, so it's best sometimes just to close it out at 1600. So what are we looking for to meet the weekly high, right? Obviously, price is going to be some sort of daily, weekly, or monthly PD array. So basically any sort of 4-hour plus array. Preferably opposing the array that was used at manipulation. So if we dropped into an IRL, you look for an ERL and vice versa. And preferably, like I said, it's going to be time-based. You're also looking for some sort of preferably LRLR, so relatively equal highs or lows to support your bias. And then that would be really for price, you know. Time, you want to be looking for, based on the profile, I'm going to keep referencing it, but in that core content video, based on the profile, you have days where it's expected to form the high or the low. So if we have a classic buy week and Tuesday forms the low of the week and you see all those requirements met, you're expecting expansion until Thursday. Sometimes it goes until Friday, but up until Thursday. And then Friday sometimes can have a retracement. If we have a midweek reversal, meaning Wednesday forms a low, you're expecting expansion until Friday. Right? So if you're looking to, what days do I trade Friday? How come sometimes it gives a TGIF and sometimes it doesn't? You're looking for a TGIF if the weekly low is formed earlier in the week, right? And that target's been met going into Friday, and now Friday's going to have that retracement. If it's not been met, or let's say the weekly low is formed on Wednesday or Thursday, you're going to see expansion going into Friday, right? So it's going to be day of week, the time, as well as session. Now, like I said, if you have the PDF, there's going to be a bunch of content based off of this in chapters, like I think part 2, chapters, I don't know what chapters it is, but you know that your profiles, if you're bullish, there's 2 high quality ones that you see. If we're expanding, and normally if we're already within this section of the weekly candle, you're going to mostly see 2 daily profiles, either classic London protraction or a New York open reversal. It's far and few between that you see the one shot, one kill happen on a swing to Z. And normally, if we're already in that weekly expansion, price does not want to consolidate within the range. So you're going to see 1 of 2 profiles, and that's going to be either the classic London protraction profile or a New York open reversal. So one of these two, let me loosely draw these out really quick. This one or this one. And if I label these with times, this will make a little bit more sense. So you have your London open here between 2 to 5. You have your New York open here between 7 to 10. And you have your London close here between 10 to 12. And then over here, same exact thing, New York open, London open, and a London close. So this does not contain the entire daily candle. It does not go all the way up until the PM session in this case. But in these loose depictions of basically the market from midnight until noon, you can see that in both the daily profiles, London close is making the high of the day. So the time frame between 10 to 12 p.m. There's going to be, like I said, there's going to be other times where it does expand into the PM session, but we're just loosely looking at basically your entry until a couple hours after. In both of these bullish profiles, London close is making the high of the day or of this respective range. So if we see Wednesday form the low of the week, right, it tags those PD rays and meets all those requirements like we talked about, and it starts to expand, we're expecting Friday to make the weekly high. Friday should make the weekly high on top of that key PD array, but also not just Friday London close. Friday London close. So Friday post 10 a.m., preferably closer to 12 p.m. This is where it's going to make the high of the day and high of the week and high of the session. You have this alignment of time, and when it lines up with price, fantastic exit. All right, and then your fib extensions are going to be your, obviously, weekly extensions. So weekly fib and then subsequent, I think, right? Subsequent daily projections. So if you know your weekly fib projections are going to be your weekly fulcrum points as your anchors. So you're basically, before the weekly low has been put in, your weekly high to weekly low. I'll show examples of these. And you're going to be looking for 1.27, 1.68, or a symmetrical price swing, which is just 2. All right, so if you've been in my live streams recently or any of those lectures, you basically just look at the 1-hour chart, pull your weekly low to weekly high, here's your weekly profiles, and then you look for the key PD rates, typically that lines up within these ranges, and this will work 99% of the time when we're talking about weekly profiles. So, and then your subsequent daily projections is basically, if you see retracements going on the right side of the curve, you can project those as well. I'll show examples of these so it's clear and concise, but when we're talking about targets for your one shot, one kill, preferably it's going to be when all these things line up. If they don't, it's perfectly fine. Like I said, if Wednesday makes the low and you're buying in New York open, you can 100% close out at 12. There's no problem with that before it meets that weekly target. And sometimes you're going to do that. That's perfectly fine. But I'm saying the opportunity is there to be holding it for multiple days. And you don't have to worry, as soon as it tags 1030 and takes out that swing high, you don't have to worry about it completely reversing down to your New York open low. Typically, the intermediate term lows on the 15-minute and 1-hour chart are going to start to be holding at this point, and you're going to see price just continue to spool higher and higher and higher. All right. So we talked about framing the week. We talked about targets now here. We can talk about an entry model. It's really not too complicated, but you're going to use whatever entry model you want during the time, but preferably your entry is going to be during the New York open session between 7 to 10, using some sort of M15 PD array. It's going to be run on stops or imbalance. Pretty simple. I'm not trading on the 15-minute chart. You're probably not trading on the 15-minute chart. So whether or not you want to use that exact PD array to be trading on is fine, or you just wait for the same exact lower time frame model that you normally look for, right? M15 drops into at 9:30 or whatever, displaces away. You take the first 1-minute gap. That's perfectly fine too. That's going to give you actually a way better RR than you trade on the 15-minute. But basically, all it is you're just looking for a 15-minute gap. Once those things are lining up, 15-minute gap during the New York open session, take that, boom. You can run that for the rest of the day. All right, so I'm not going to get too deep into the entry models. This is kind of just up to you. This can be any New York session entry model towards your towards the weekly, the daily target, right? So I'm not talking about trades like, obviously, if this is the session, think this is 9:30 and this is 11 o'clock. I'm not talking about use your entry model to here. I'm talking about any entry model that is in line with that session daily and weekly target. All right. So let's show some examples of these weekly fulcrum points and of the entries as well, and of the extensions and such. So let's go back over here. And using this weekly example, you can even look at the other weekly examples is perfectly fine too. Like if we go back to here, right? This is FOMC. So FOMC makes the low inside of this 1 hour gap, runs up for the high of the week, which in this case, it's not anything resting above because we're at all-time highs. But if you take the weekly high to weekly low, extend that, you can see Thursday and Friday print nicely within the 1.27, 1.68. And since Wednesday forms the low, you expect expansion until when? Friday, the London close session, right? So Friday, London close session. Up in here, what time is this? Friday forms the high, and you can see it's post London close around 1500. It makes the high of the week within here. And in this case, it's all-time highs, so we do not have any key PD rate, but you could be using time and price and such to be finding those entries, right? The same thing over here. Instead, you have the inverse. You have a previous weekly high being used. So what are you going to be targeting? A gap in discount. You have a dealing range from previous weekly low up to your high in here, right? You have one gap in discount, second gap in discount. Those are both your IRLs. So it runs the previous weekly high on Monday. Tuesday consolidates and drops down. At this point, if your bias is bearish, if Wednesday has some sort of high impact news driver, even if it doesn't, that's already in line with your draw. So you're just looking for a bearish daily profile here, a bearish daily profile here, and preferably some sort of bearish or consolidation week or consolidation day on Tuesday. So you have a classic sell week here. Trades up on Monday and Tuesday, classic sell week. So you're looking for expansion until Thursday, preferably Thursday London close. You have your extensions here. You can use your weekly profiling targets, -2 symmetrical price swing, 1.68, 1.27, also within the range. So giving you multiple PD rays, and then the low here is formed on Thursday at 9 a.m. There should be SMT between these two. I'm not going to, for the sake of time, I'm not going to go through, but same thing over here. Wednesday forms the low of the week. You can take your fulcrum points from here to here, gives you your weekly high. You can do the same exact thing with this week as well. Drops into the, let's go over here, drops into the daily gap formed on Monday, like I said. Take your fib extensions from the high of the week down to the low of the week, puts it to 1.27, 1.68, and that's where we close today. All right, right above the previous weekly high ERL, so IRL to ERL. And then this, what I was talking about over here with the where did I go? Basically the subsequent, oh, here we go, the subsequent daily projections. So you always want to be using the weekly fib to find those kind of weekly targets and stuff. But if you have a retracement, this case, this manipulation from Thursday, you can project that as well up, and you use the standard -2 at 2.5. And if it lines up in this case with this makes this area very high probability to form the weekly high. So you can see it doesn't just stop at the previous weekly high, right? This is useful because if you're this close on Friday or on Thursday or whatever, I'm not going to put my target right at the previous weekly high. You know, sometimes I want to be shooting for higher than that, or if it's going to offer me more, why not go for the entire weekly move? So this overlap of fib projections is where you have the highest quality exits being offered. And you can do the same thing even over here, doing the same thing with these, different fib projections lining up with different points. So, and then entries, right? So let's take a look at entries. We talked about entries being basically just New York open, M15 run on stops or an imbalance. You can basically look at every single day of it being a one shot, one kill. So Thursday, let's go to the 15-minute chart. We'll clear some of this up. Let's turn on this to 20. All right. So here, same exact thing. New York open, run stops. You could use that swing low, You could use the imbalance, run on stops during New York Open. Same exact thing. Your entry models are all going to be here, but I'm just showing you the framework for the setup is going to be on a 15-minute gap or liquidity pool during the New York Open session. So here's your one-shot, one-kill opportunity here. Same exact thing offered on Friday, right? Imbalance and a short-term discount drops into it, even if it's CPI, still has precision. The week prior to that, you have Friday offering you your move, or even Tuesday offering you the move. Same exact thing. You could come over here to these weeks. Wednesday, high impact news driver during the London session forms the low. You have a gap in here on the 15-minute chart. I'm sure if you've seen this over and over, I'm not gonna drill it in. You've seen this before, but basically, you're just framing the setup if you're bullish for that day or that session on a 15-minute run on stops or a 15-minute liquidity pool. If it's your true one-shot, one-kill, it'll always be offered within that New York Open session, just some sort of continuation trade, right? So, like I said, you're free to use whatever entry model you want, as long as it's in line with that drawn liquidity for the session in the day. But the framework is built off of that 15-minute run on stops or pool, because the 15-minute is the session minimum for a manipulation target. So just how we talked about up here, has to be preferably a daily, weekly, or monthly PD rate. When we talk about the session, it's normally going to be at a minimum a 15-minute PD rate or higher. You normally look for a 15-minute or an H1. So only two time frames you look for during the session. You're looking for a weekly low, daily, weekly, monthly, 4 hour plus. On a session perspective, it's an M15 or an H1, right? So we've gone through profiling, gone through figuring out how to qualify a weekly low or weekly high, looking at targets, entry models, estimated determinist arrival, going through my list of notes here, weekly profiling, daily profiling, low probability and high probability. So I've basically gone through most of what I wanted to talk about here, unless I'm forgetting something. And like I said, the video that's going to be accompanied with this would be your month 7, episode 3 video. That'll show you an in-depth explanation of basically each of those weekly profiles. And then I'll show you some execution examples from, this is the one from that FOMC screenshot. I can't screenshot it. The FOMC week and the target in here. Buying it basically on the FOMC day inside of that daily array, and then selling one above short-term highs and premium, selling another one above the current weekly high. And then this one is on Thursday during the London close session, or right before that. Basically, it tags into the 1.27 extension. So you can see I'm not just targeting the swing high, right? I'm targeting preferably what that weekly high is going to meet. And you don't have to hold overnight. This is obviously just a demo trade. But you do not have to hold overnight. If you just want to hold from entry till noon, you have both time and price in alignment. So it's likely to go further in price, and it's likely to go further in time. So you don't have to worry too much about it just completely reversing at 10:30. As soon as it hits your swing high on the 15-minute chart, it has way more room to run in the x-axis and in the y-axis. So the probability of you having a nice winning trade is exponential compared to you trading on a Monday with no direction of where the week is going to go, and instead you're just looking at a 15-minute chart trying to trade a 15-minute scalp from here to here. It's still going to be offering a setup, sure, and every single day it's still going to be there, but why not trade the highest probability day? And if you can hit that banger on Wednesday, you don't got to trade for Monday, Tuesday, Thursday, or Friday because of that. Why not look for this kind of setup? So this is what I'm looking for going into Sunday. And obviously the explanations and examples are in the previous videos that I've done on the one shot, one kill. So if you want live examples of me doing this, just go back to those one shot, one kill videos that I have on the markups. Any of the past basically 3 weeks of data from the OSOC to the daily markups, you'll see it probably in each of those videos. And you'll see, okay, this is why he's pulling this PD rate, and this is why he's using this day of the week, and this is why he's not trading on Monday or Tuesday, but he's instead looking on Wednesday. I think it's much clearer if you have an understanding of it and then look at the markups, right? So like even for yesterday's PA, if you do the daily markup and then go back and watch the tape reading live stream, it makes a lot more sense. So let's go through questions here. If you got any more questions, you can put them up. But I hope I made this as clear as possible. It's definitely a lot of information, but this is all recorded, so you can go back and watch it as many times as you want. We've had a bunch of this midweek reversal profile the last few months. Yeah. And you're gonna see the consistencies in when those profiles present themselves based off of where we are in the range. I'm gonna leave ICT to explain all of that. But yeah, it's not terrible to understand basically once you just see the similarities in every weekly profile. If you go back for the previous 30 weeks, you'll see the same exact stuff in every single one of those, and you'll see a one shot one kill opportunity on the day that it's already expanding towards that weekly draw. The 3 weeks come into play. Identifying. Yeah, it's more of just a rough explanation of the data you need for determining narrative. You look at the previous 3 weeks, normally it's going to give you narrative of, okay, this week did this week did this week did this. It's building onto it. So then the following week you can kind of build onto that narrative. It's, you're also going to see, the inefficiencies and the liquidity that are being left behind from those weeks. So I'm using it really to build my narrative coming into, on Monday or Sunday. And then once that narrative and bias have been cemented, I can fill in the blanks. That's literally all I'm doing is I'm just filling in the blanks. What's the economic calendar tell me? What does the PD race tell me? And just letting those days play on. In this case, even if you are waiting for that one shot, one kill on Wednesday, for example, and Monday, Tuesday do something completely opposite, like I said, you can go back and really structure what's going on and then frame a new weekly profile and then a daily bias and a session bias off of that. And this is what I'm doing. Every single time I get a day wrong or a day right, I'm making sure that it lines up with what I'm expecting for the week. And this is really the highest time frame you have to go. ICT has said it. I always thought it was BS. I'm like, why would if I'm trading the 950 macro, why do I need the weekly profile? Like, it makes no sense. But I promise you, if you really study this, this is where the skill is, and this is where all the answers are. Because if you can understand it, the session bias is easy, and the macros are way easier because you already have this target that's 300 points away. Why would you be scared of taking a 950 macro to the short-term swing high? It elongates your trades. It shortens the amount of trades you have to take. Are you planning to post today? Yeah, this will be posted today. Based on today's PA and news at 8:30, was there an entry at 9:30? Yeah, we can look at it. So, like I said, this was, in this case, we had the daily. Let's mark this out properly, right? Let's go over here. Let's close this out. We have our daily imbalance in the form of the one that was formed with the new week opening gap and the Monday's PA. You could also use the inversion fair value gap over here. I don't really like it too much. You can also use this gap over here. Either one, any of them are fine. Still a daily imbalance. All right, so let's use this one. So reclaimed daily imbalance. And then you have the previous weekly high resting above. So looking at the 1 hour chart, the 4 hour chart, you can see Monday runs up, continues the previous weekly profile, and consolidates and generates liquidity right below the higher time frame stops and generates all of this low resistance bias liquidity as well, which is one of those requirements for targeting, right? Dropping back down into the range on Wednesday into that daily array, and then on Thursday expands. So we're expecting the high of the week to be formed on Friday, London close session. Friday, London close. So when we're looking at it and building our bias and our entry coming into 9:30 in this case, you have a fair value gap on the 15-minute chart at 9:30. It trades into that fair value gap and then runs out the short-term swing high, and also is already trading into the weekly fib projections. So we're already above the previous weekly high. We're already within the 1.27 to 1.68. And now the time of the day is we're already within the London close session between 10 to 12. So this short-term swing high at 10 a.m. here meets all of those requirements, right? So 9:30 basically just drops into the range, offers a fair value gap trade, and then you're free to use basically whatever you want on the 1 minute or the 5-minute chart, whatever your entry model is. Like I said, it's going to be there. So whether you trade a run on stops or whether you trade your SysD model or whether you trade a fair value gap model, all those tinier models will be there. So you're still going to be offered a scalp, and you're saying, okay, Flux, this may be a one shot, one kill, but it's not offering you a move. It's because we're already up here, right? We're already basically at this section of the weekly candle, but this still has the opportunity to give you your weekly move, right? If you're taking a 2R setup from here, that's perfectly fine. And if you really look at the numbers, most people only need around a 3 to 6R per week to be making money. Like you don't need a 16R per week to be, your goal should be 3R per week on average, and if you use compounding, that's plenty. But yeah, preferably you'd be looking for a setup on Thursday or Wednesday. That's why I streamed and traded on Thursday, like you saw in that tape reading stream. I didn't trade or stream on Monday or Tuesday or Wednesday. How come it's Thursday that I decide to show up and it's magically just expanding on that day? This is what I'm using. So yeah, there is a setup on 9:30 on this day and at 8:30 news, and you can see even the 8:30 news is following exactly what it should be doing. It's a late week news driver. We have not met our expansion target for the week, so this is why it just shoots up like that. And this would be, preferably if it wasn't CPI, this would be a trade opportunity, and it's framed off of what you're looking there. I feel for the next level of being a scalper, trading the New York session is this kind of setups where you can have nice swing trades. I just fear that I'm going to get souped the PM session after my entry the next day. That's what I'm talking about. So if you're already in that range expansion, the chance of it coming back down and sweeping session stops is very, very low. If you go back to the 15-minute chart and basically look at all the times that the session is expanding, look at how many swing lows are being left from the liquidity pools, right? So from Wednesday onwards, it does not want to soup any swing low basically after the New York session. So PM session low here, Asian session lows ran out. That's perfectly reasonable because of the fact that you have an open low high close for Thursday. AM session low left over, PM session low left over, Asian session low left over, London, AM. So you see all this liquidity being left while all the liquidity up here is being ran out. Same thing over here, low, low, low. In this case, the low of the AM session, right? Same thing on any of the weeks that are expanding, you see that move. Low, 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 soup on the, so you're not going to see a lot of times if I'm taking, if you're taking that trade at 950 with these things in line, the PM session a lot of times is going to be expanding towards that draw, unless it tags some sort of, the previous daily high, and we're shooting for the previous weekly high, and now it's going to offer a retracement going into the next day. That may be a situation where it's going to be problematic. But even for a scalping point of view, having all these things lining up for your scalp just takes off so much pressure off of you to be a super sniper, right? You basically can just say, okay, as soon as that 15-minute PD array is tagged, I can take any 5-minute order block or 5-minute gap up until 1500 and it's going to keep going. You know what I'm saying? Like, obviously that's not 100% true, but you get the point. Is basically at that point, every single 15-minute, 1 hour, etc. PD array is going to start holding towards that draw. And it makes it so even if you miss your 950 macro entry, just take the next 1-minute gap. And it just keeps going. So the precision there on a scalping perspective, the weight is lifted off of your shoulders. You don't have to be as precise. You don't have to just take it from this swing low to this short-term swing high. Taking it from, I see people taking trades from here to here. There's nothing wrong with that, but I would suggest just opening your eyes a little bit more to what the possibility is for that trade. This is the kind of trade that I used to take, is just from here to here. 20 points was my target. You go back and watch my old content from 2022. I was the 950 macro demon with 20 points. But, now I'm able to hold for days if I can, or sessions if I can. And I encourage you to find out, all these things. But I'm giving you the framework for free. So you can really understand what is it that you're looking for. And you don't have to go back in and find out what's the similarities between each week and what do you look for to qualify a weekly low or weekly high, and what do you target. All those answers have already been figured out. So my encouragement to you would be go back into multiple weeks of PA, and in following weeks of PA, are the similarities there? Obviously, later into the year, in the summer and in the winter, it's going to be much more difficult to do so. So that's where you're going to have a lot more scalping of the sessions and of the days. But you're still going to see that weekly profile playing out. It's just going to be harder to read. If you look at the fall and the spring, those weekly profiles are super, super clean. Then you look at July and June PA, you're like, what the heck is this? That's normal. It's just part of the the solution and the problem of the yearly candle. So you're going to be left with just trading days and doing that stuff. But this is just such a powerful weapon that everyone needs to have in order to understand what's going on for each individual day. And I'm telling you, if you could take one thing away from this entire video, it is just that, is figure out once you lose or win a day, what's going on with that day and with that session in relation to the weekly candle. If you can do that, you can plug and play. The next following sessions and days are going to be way easier because you know what it's likely to do. And then as a result, you know which days and sessions are likely to be high probability and low probability. And why is it chopping around here? So why is it moving away from the draw here? Like why is on Wednesday, why did it start moving downwards and not form any 1 hour gaps? It should be telling you something. All of the Thursday PA is reviewed already, but you can find that in the YouTube vid section if you want to. Yeah, no problem, Pretty. We'll see you later. She's probably already gone. Slander, you already know the answer to that question. This guy. But yeah, I feel like I've covered everything I have on my list. If you got any more questions, you can put those in. Like I said, if you want to go back into all of those examples, there's plenty of them. If you want even more data and examples and precision elements of an entry model, the PDF is available to you as well. Nothing but 5 stars on that. Shameless plug. And obviously that'll really improve your understanding of lower time frame and higher time frame alignment. But yeah, if you got any more questions, you can send me a DM. We've already been going for about an hour here, so I'm going to wrap this up, and then probably we'll do the psychology stream / Q&A sometime this weekend. All right. So hopefully it was insightful. If it didn't make a lot of sense, that's perfectly fine. Go back and watch it a couple of times until it does. And make sure as well you check out the core content month 7 video, as well as any of the one shot, one kill examples that I have on my channel. All right. So I appreciate you guys sticking around and hope you enjoyed. Until I talk to you guys next time. Peace.